Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, September 2nd, 2020. What we're going to do is take a look at gold, silver, the US dollar. A couple things to note there today. Nothing huge, but a couple developments worth noting. And then a brief update on the stock market. Not a lot new there, but I do want to cover what happened today on the NASDAQ 100. More importantly, what's going on in the VIX and the closely related SKEW index as well. That's another index that uses put to call buying to try to infer what's going on there. All right, so let's start out with gold. This is just bigger picture, long-term recap of longer-term picture. This is the blow off top. Last bull market ended back in 2011. The previous bull, that is, that bear market that started then. Ended in December of 2015, and we've been in a bull market since. Ran into that major reaction high right there recently, which was resistance, where I expected a reaction, and so far we've certainly had it. I still favor a little more pullback. We'll see. I remain longer term bullish in gold. Near-term bearish, looking for a little more downside, which may or may not come, but again, I'm leaning that way for a lot of the reasons covered before, the divergences, PPO rolling over, and also looking for a bounce in the US dollar. A lot of this lift in gold, especially in recent months, was due to the falling dollar. So just like I'm longer term bullish in gold, I'm longer term bearish on the dollar, but nothing goes up or down forever. So I'm looking for trend reversals in both of those, corrections against a larger trend, if you will. All right, let's go down. This again, that's a long term chart. You can see that we have for 1, 2, 3, 4, 5. A while now, about a month and a half, consolidated on that long-term resistance level there. What happened today on gold, GC, or didn't happen yet, and it's close. We're close to that trend line. There's the 60-minute uptrend line right here. You have trend line support hit there, and we've been tapping on it recently. We're just above it now, and so what I wanted to point out with is this reversal we've had in the dollar recently. Nothing big so far, but the case for a bounce in the dollar continues to firm up. This is DX, US dollar futures. We have a breakout above the downtrend line, although A, it's not very impulsive. This is it right here. And B, we had a couple whipsaws above it lately. So you want to give it the benefit of the doubt. What we might even want to do at this point in time, since we had those other reaction highs, is maybe give it what I call a BOD, or benefit of the doubt trend line, an alternative trend line there. Either way, a little more upside should do the trick. But ultimately, I want to see, and I expect it to happen, the dollar work its way up here at about that 93.95.4 level, and then probably have a reaction around there. But if and when we break above that, that would give us probably a leg up here all the way to about that 95.67-ish level. And again, so the bigger picture is this bullish falling wedge pattern right here. And positive divergence. When I say bigger picture, at least on this 60-minute time frame here. Okay, so again, to clarify, it was this recent lift here in the dollar that has put pressure on gold and brought it back down to the trend line. So we either get another rejection here, maybe work our way down within the wedge. Remember, gold is at support, so that's certainly a possible scenario, and we could still then go on to break out above the wedge later, or we can continue on up maybe tomorrow and this week, and if so, gold will probably break that trend line. That'll give us a near-term sell signal, the next objective short entry on gold. And a quick look at silver, SI, silver futures. There's a trend line. I had to update my chart today. This charting platform here rolled the futures contract. So all the trend lines I had on the previous ones were lost. But here's one I'm watching right now on the 60-minute chart. And it looks like we just cracked. So just like the dollar, there is a breakdown below the trend line. Remember, the dollar had a breakout above the trend line, but not by much and not very impulsive. It is a start, though. So if we get more downside tomorrow, then we can clearly say this trend line's taken out. Same thing on the dollar if we get a little more upside. And forgive my voice, I had some dental work today done. That's why I was out earlier today. I told you I'd be out most of today, and mouthful of Novocaine, all that kind of stuff. And so if I sound a little bit off today, that's what that's all about. Hopefully that'll work itself out soon. All right, next up, let's talk about the markets. Not a lot new to report on the indexes. It's Groundhog Day again. NASDAQ 100 just continues to work its way up. This is a longer term trend line that goes to the left of this chart here on the 60-minute chart, but what I'm watching just in the very near term is this orange uptrend line. So almost every day this week and even last week, we keep kissing that trend line. We kissed it again today and bounced off there. Here, let me zoom in just a little bit tighter for you. There it is. And that's it. So we need to take out this trend line. And this is why I talk about 60-minute close or a solid break. That's just a little whipsaw down through there to remain above trend. So no change there yet. But let's take a look at the VIX and see what that's telling us, because I think it's telling us a different story here, or maybe giving us kind of a heads up of things to come. Now the VIX, for the most part, well, let me back up. I was about to say it doesn't have predictive value, but it does. It does have predictive value in the same way the S&P 500 has predictive value, or the NASDAQ 100, with looking at the technicals. But what I was going to say is typically these big surges in the VIX right here come align with corrections in the stock market. There's one right there. There's one right there. You know, trend reversals. But you can see on my chart here, I've had levels. You know, and there was a downtrend line there before. It somehow went away right there. Downtrend line coming into there. But let me zoom in a little bit. These rallies will, at times, you'll get a slight heads up on the VIX. Sometimes the breakouts in these rallies coincide with the breakdowns in the stock market and the major index equity indexes, the stock indexes. However, there are times here. Let me show you. Let me put up a comparison here. Let's put up the S&P 500, SPY. And now you can see, and let's just make it a little bit different color to stand out. There we go. Okay, so these are the same levels. I've had these trend lines drawn on the VIX. I pointed out these divergent lows in the past, these breakouts. Remember, divergences are not a buy signal. It's an indication of a trend reversal. So at the same time you get the negative divergences on the index, you typically get positive divergences on the VIX. And if you can align it with a pullback to support, all the better. And so you can see there was our buy signal right there, and it came shortly after the market peaked right there. Again, next buy signal, we had a bullish falling wedge right there. And by the way, it does work in reverse. Divergent high, time to get out, cover your shorts, go long, etc. But here was a buy signal right there. And this one you had a little bit of a heads up. It came right at or just before the top. Remember, this is the S&P 500. There's a correction. So there was your breakout and rally. Here's your next falling wedge and your breakout right there. There was your correction, and so forth and so on. Here's one you got a pretty good heads up. You had a nice clean downtrend line right there in the VIX. Put in a divergent low, extended the divergences up to this point, broke out right here. There was your breakout point. It was just a little jog back in the markets, but the markets pushed on, made a new high right when the VIX back tested. And then boom, that was an explosive move up, and that was your COVID drop right there. This other drop back here, I don't know if you, yeah, I guess you can make it out. That was that big fourth quarter 2018 drop right there. And again, the VIX gave you a heads up. The VIX broke out, given it was just after the market peak, but that was about a 20% drop right there in the market, if you can see the purple line. So again, the VIX has at times predictive value, and this time we'll see if it plays out. Usually you don't see the VIX rallying this much with the stock market still moving up. The market has not peaked yet. This is we're clearly in an uptrend. But yet on the other side, the flip side, the VIX broke out. There's your breakout candle. There's your back test. And it's been moving higher since. Another green day today with the stock market up, posting some pretty nice gains. So that's that. Let me turn those lines off, and I want to show you a couple other things. Let me turn off the comparison, and we'll look at, we're fortunately this time we didn't short. I don't have any official shorts because I don't have any sell signals on the indexes, but we do have an official long on the VIX, VXX, via this ETN VXX. And nothing big, but so far up again today, another 2.46%. steadily climbing higher. You can see alternative trend lines. You have a bigger, larger primary downtrend line right there, which has been taken out. And then you have this smaller wedge type pattern, a breakout and backtest there. That looks like similar to what happened on the VIX. So I wanted to point that out. And again, what does it mean? Well, only time will tell. But when I go back to that VIX chart that we looked at there, these are pretty compelling. You know, these moves in the VIX, and they're large. You know, they measure, most of these are double, well into the double, often triple-digit rallies in the VIX. So you can get a lot of bang for your buck. And let's look at one other thing, and we'll wrap the video up, and that would be the skew index. Okay, the skew index. What is the skew index? You can go to CBOE's website. They'll talk about it, but this is it right here. The skew index is an option-based indicator that, just like the VIX is, and it measures the perceived tail risk of the distribution of the S&P 500. Blah 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 blah. In other words, in layman's terms, tail risk is the risk associated with an increase in the probability of outlier returns to more standard deviations below the means. Think stock market crash or black swan. So that's what the skew index attempts to warn of. And again, like everything else, like the divergences I warn of, bullish or bearish, you know, for a trend reversal in a security, overbought conditions, other maybe bullish or bearish chart developments, nothing is 100%. So just like this, you can't go put all your money all in short for a market crash every time you get some readings there. But I'm going to just show you the how do you interpret the skew index. Now typically this skew index, or historically, it's averaged between a range of about 100 to 150 with an average value of 115. So 150 is really pinning it. That's the historic high end of the range. Let's look at where it is right now. Well, yeah, I guess we can start with this one here. We just tagged the highest reading in years, if not ever. We just hit 148.20. We're coming off there. Here's the skew index. In fact, let me show you. This is on CBOE's website. It goes back a little bit longer. So here we are. Let me just grab a little tool. That's where we're at. And you can see it peaked out here back in that 2018 drop, fourth quarter of 2018. I had a big peak right there. Let's see. Let me just put the marker on it. That was in... well, I can do it here. This one will show me a little bit better. There it was. That was in August of 2018. Remember that fourth quarter crash came and it dropped. The market plunged from really was about October into the December lows. And there was a heads up. So it's not 100% effective. Again, there are times where it gets high and you don't have anything, but does a pretty good job. And when the skew is low, like you go back in here to the, you know, bottomed out in the early 90s, that was right when a recession ended, and one of the at the time, the strongest bull market in history started up at that point, the great 90s all the way up to 2000. And then it peaked out here in 98. There was a shot across the bow before that bear market ended, or bull market ended. Finally ended in 2000. So I just wanted to point that out. You can see that you know, this last one definitely played out. It was a 20+% drop, and you can see some high readings here, and especially the recent readings. So I just wanted to point that out. So we're looking at the VIX already telling us, at least you know, whether it proves to be right or wrong, that it's broken out, and it looks to be headed up quite a bit. You know, that we're at the first target now, 25.58, and if history repeats, I think it's got to move up here to at least this 44, you know, we'll call it 45-ish level. That'd be about a 72% or so run in the VIX, possibly more. Everything again, wash, rinse, repeat stuff. Just the similarities, they're all there. The positive divergences, you know, your trend line breaks, wedge breaks. There was the last one right there, and that was a quick kind of one and done move, little jog back in the market. But again, we took out the trend line, and that gave us a buy signal in the VIX. So here we are, and that's it. That's what I wanted to point out. Other than that, I have to do a little more catching up in the charts. I don't see anything else that stood out today. And this is a situation I'll continue to monitor looking at the VIX. Put to call ratios, by the way, things like that I've covered recently, they're also at extremes. The put to call, total put to call ratio, equity only put to call ratio, things like that are just triggering, at levels before which have led or preceded significant pullbacks in the market. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.